It is 2 o'clock. I know that we still have a few participants joining us today, but I want to thank everyone for attending this special edition webinar. My name is Harley Moore Wilson. I work with the Native Agricultural Financial Services. We are a Native finance lending institution, specifically in agriculture, based out of South Dakota, but we have individuals that work on our team all across the United States. This is being presented. Today's presentation will be by Mr. Rob Holcomb, and I will let him introduce himself in just a few minutes, but I'm going to speak a little bit more about how we are able to provide this webinar series. We have received the Extension Risk Management grants, and we are focusing in on all types of risk management within agriculture. Mr. Rob did a taxes webinar and a business entities webinar previously. All of those are recorded on our YouTube channel, and you have availability to see those recordings. Lynn, I do see your question. Can we get a copy of the slide deck? Yes, you will be getting a copy of the slide deck. So that leads into, after the presentation is done, I will be posting the recording to our YouTube channel, and then I will send out an email that goes to everyone that's attended the webinar, along with everyone that registered. And you're more than welcome to share that information out. We are recording today, and just a few housekeeping things is please utilize the webinar chat or the Q&A if you have any questions. And then at the end, I will allow everyone the ability to speak, and so you could have a more free conversation to ask your questions if that's how you feel the most comfortable. Yes, Jeff, I will be sending a link to the YouTube channel. I will put it in the chat. And at this point, I'm going to let Miss Mariel introduce herself. And then as soon as Miss Mariel is done, Mr. Rob will introduce himself and get started in the presentation.
Thank you, Harley. Hi, everybody. My name is Mariel Kesnick, and I'm with the Farmer Veteran Coalition. And we help veterans across the United States with resources in agriculture. So if anyone is on and has questions about membership or getting connected with a local chapter in your state, just shoot something in the chat, and I'm happy to reach out to you. Go ahead, Rob.
All right. Well, thanks a lot, folks. Welcome, everyone. My name is, as Harley mentioned, I'm Rob Holcomb. I'm an extension educator with the University of Minnesota. And in Minnesota, we've kind of moved away from the county educators, and we're regional, so I kind of have statewide duties. But the other thing that I do, as far as my role goes, is I also serve as the tax school director for the university at large. So a lot of what I do with this records program is going to be somewhat related to the tax, because that's one of the main reasons that you really need to have a good set of books is for backing up that tax return, and there's a multitude of other reasons that we'll touch on here. This is a good time of the year to talk about this, because a lot of folks, we're getting to the point where we're getting close to mid-March. A lot of farmers have already filed returns, so now the focus turns to, all right, when the snow melts, we're eager to get back in the field and everything. But we also ought to think about, if there's something that we weren't really happy with as far as our records program in the previous year, now's a good time to get that thing started. I mean, don't try to redo your records the middle of December when you're trying to get everything pulled together for the end of the year. One other thing I wanted to address too, somebody in the chat was asking about getting a copy of the slide deck. The first post in the webinar chat, there's I posted a what we call a Z link. It's that link that's in the chat. It's that HTTPS zoom.umn farm records. If you click on that, that'll take you to a Google site, and you can download the you can download a PDF of the presentation there. And folks, if you have trouble doing that, I'm gonna give my email out a couple times during the presentation. If you're having trouble with it, just shoot me an email. I'll just email you a copy. I mean, don't sweat it. So here is my contact information. I'll have this up at the end as well. I guess I've been an enrolled agent. What folks always ask, what's the EA for? It's an enrolled agent. Enrolled agent is a tax certification credential that's issued by IRS. In order to get that, I had to sit for a 2-day long test 20 some years ago, and I have every 3 years I have to take 72 hours of continuing professional studies that I have to do to maintain that credential. So I definitely have to stay up on that. Plus, I have the roles that I have with the income tax short course. The only recommendation I guess I would have is we're still headlong in tax season, and I travel a lot. I do a lot of speaking outstate. If you do try to reach out to me, you may want to try email first, because if you call the office, that number does ring right here at my desk. But if I'm out for 3 or 4 days, and the email might be easier to set something up for a conversation. So just a little heads up there. So let's kind of start off with this thing now. Uh, Folks, just a little bit of background so you kind of have an idea where I'm coming from with all this stuff. I started out as a high school ag teacher right after the farm crisis in the 1980s. I mean, I graduated from Iowa State with a ag ed degree in 1984, and taught high school ag for 6 years. And from there, I took a position with the Farm Bureau organization. Farm Bureau in certain states has a tax and analysis program, and that's the program that I moved with. And I was with that program for 15 years, serving kind of as a software consultant. And we had records programs. I consulted on records programs, and also did some tax consultation. Now, then from there, I came to the University of Minnesota. I've been here for 20 years. But when I came to the University of Minnesota, I started out as a field analyst for one of our farm management associations. So when I came to Minnesota, I was working with about 100 farmers. And what I would do is I'd help them with their records. I'd do summer visits where we would make sure that they were keeping up with everything. And in the fall, we do fall tax planning. We ended up doing a financial analysis with FinPac, which happens to be a University of Minnesota product, and ultimately we'd end up doing the tax return for them. And from there, I moved to my current position where I'm in a 100% extension appointment, but I moved more to an educational role working with the income tax courses. So I've got a fair amount of experience with that one-on-one farmer stuff, and can share a lot of horror stories. I can tell you what works, what doesn't work, and that's largely where this discussion is going to go. Now, as far as the importance of this stuff, now a lot of this is common sense, but we still want to talk about this a little bit. You have to have, in order to do that tax return, in order to know whether the farm made money or not, you have to have that set of books. Now, folks, I will tell you, over the course of my career, I can attest to the fact, sitting down at a computer or at a hand kept record book is one of the last things that a farmer is interested in doing. The farmer wants to be out, working with the livestock, or scouting crops, or doing something out on the tractor, or being out in the barn. The last thing that they want to be doing is sitting down and doing records. I mean, it's something that they vehemently hate doing, but it's a necessary evil. All right, it actually is. Now, the maintaining that, for that financial management and planning, right? You've got to have those numbers in order to make those decisions. I mean, one of the biggest things that I did with the Farm Management Association was I'd have these farmers come in November, because most of them were calendar year filers. And farmers, most farmers are cash basis, so they would come in with their records up to date in November, maybe early December, and I'd plug some numbers into some software applications, and what we'd do is we'd see how much income and expense that they had on the books year to date, and then I'd ask them, all right, what do you have to collect as income before the end of the year? What do you think you're going to have for expense? And then we'd look at, you know, well, gee, I can go out and I can prepay some feed, seed, fertilizer, chemicals, items of that nature, or some cases they might want to go buy a piece of machinery at the end of the year and do a fast write-off to manage the tax bill. If you don't know where you're at when you come into that November meeting, I can't do the job. I mean, you can't tax plan before the end of the year unless you got that good set of books. All right, regulatory compliance. Well, the number one thing is you got to have something to back up that tax return. All right, so now I know there's been all kinds of speculation that IRS is going to go away, IRS is going to go away, and we're not going to have to worry about that anymore. Uh, Folks, the government has to get funded somehow, some way. So now politicians can talk about doing away with the IRS, but the fact of the matter is that's how the government collects their money. So I don't see that. That's not something I lay awake worrying about late at night. Now, the other thing is many states have environmental or conservation programs, and a lot of those have uh, pretty strict. Depending on the state, there can be some really strict uh, restrictions and record keeping requirements for those programs. So that's another reason why you want to make sure that you've got a good set of books. All right, to make sure that you're in compliance with that. Plus, we won't touch on this too much today, but if you have hired labor, all right, if you have employees, it's excruciatingly important that you maintain that, because you have to maintain those payroll records, because you have to provide that employee a pay stub every time that you pay them. Plus, you got payroll deposits that you have to make, and I always encourage my folks to do those payroll deposits monthly, even if they aren't required to do them that way, because then they're less likely to forget about it. All right. Now, other things, loan and credit applications. Now, we're always coming back to the lender and the relationship with the banker, and folks, it the bankers love when you come in the door, and if you've got a good set of books and they can quickly figure out where you're at financially, that is worth so much. I have actually seen clients that got a break on their interest rate because of their record keeping and management skills. All right. It's to your advantage to do that. It helps with that relationship with the lender. The decision making and profitability analysis. Now, just looking at the tax return uh, without, well, let me take a deep, let me back up a minute. Just looking at the records. All right. Just looking at the cash records doesn't always give us a clear picture of what's going on with the farming operation. Now, one of the programs that I also work with here at Minnesota is the Center for Farm Financial Management. That's the department that actually I don't work for the Center for Farm Financial Management, but the management from the center actually is my supervisor. So, I don't work for the Center for Farm Financial Management, but I might as well. So, but they put out a product called FinPack. Now, FinPack is not an accounting program; it's an analysis program. I mean, you can put together balance sheets, income statements. It does analysis, does ratios, does enterprise analysis, and what we do is what we do is when we do that analysis, what we're doing is we're taking into account what that balance sheet looked like at the beginning of the year and what the balance sheet looked like at the end of the year. So the balance sheets are the bookends. And then we stick the farm records in the middle and make adjustments according to what happened on the balance sheets. That's called an accrual adjusted income statement. And that's really the only true profitability that you can get out of your records. All right. That really tells you whether or not you made money or not. Because that's that's just a better way than just looking at the records, because in the records we might be going in there and prepaying a whole bunch of stuff at the end of the year. We might be writing off some machinery that we purchased. I mean, we're messing around doing all kinds of stuff trying to minimize that tax bill. That that tax return number that we see is a poor measure of actual farm profitability. And it's important for you to understand the difference with that. Harley talked about, this whole grant that we're working with comes down to risk management. All right. Risk management is a huge thing in agriculture right now. Right. We don't have about the only people right now that are out there making money are cattle people right now. All right, cattle prices are way up, and they're probably going to be up for quite a while, because everything I've seen is that there's probably not going to be an expansion of the cow herd for a while. But commodity prices for corn, beans, and small grains right now are, they're not so hot. So that risk management component, it's extremely important. All right, to know where you're at, know what your cost of production is, because those are the things that you have to gauge your decisions for when you're deciding whether or not to buy crop insurance. And if you're buying crop insurance, what level of crop insurance do you need to buy? All right, integrate that with if you're growing a qualifying commodity that might qualify for one of the ARC County, ARC Individual, or PLC. All right, but again, those are risk management tools, but without that good set of records, knowing where you're at financially, you're really kind of shooting in the dark. And that's really the measure of that good manager, is they know where they're at all the time. All right. Now, ultimately, what ends up happening, and a lot of this presentation, what I'm going to base this on is the Schedule F. All right. Now, many of you are familiar with that. You probably looked at a Schedule F when your accountant put together your tax return. You probably looked at it and going, okay, here's where all the farm stuff goes. All right. So a lot of the records system stuff needs to key off the Schedule F. And before we're done today, I'm gonna show you why. All right. But a lot of folks, and going back to a lot of these programs, I guess over the last few years, I've done a lot of programs for uh, minority farmers, for native farmers, for small farms. They all have a huge amount of similarity in the fact that they're very small operations. And some folks, even in those extreme rural areas, may not have ever filed a tax return. All right. In fact, I've been to locations and have done programs, and the folks are considering filing a tax return because they may have never filed a tax return before. All right. So one of the things that we want to point out here is on that Schedule F piece. Uh, on that Schedule F piece, the if you don't file that tax return, oftentimes Farm Service Agency, that's what FSA stands for. That's part of USDA. You can't really participate in any FSA programs unless you're filing that tax return in that Schedule F. Right. That's just one of the things that if you go to the FSA office and you're wanting to sign up for a farm program, one of the first things they're going to do is say, well, we want to see a copy of that tax return. So it requires that filing of that tax return. And the other thing that I encourage folks to do as well, especially with some of the audiences that I've had in the past where they may not have filed in the past, a lot of times, folks, if you've got if you're at that lower income, um, if you're at that lower income bracket and you file, all right, there's things like, earned income credit and things along those lines that it actually is to your advantage to go ahead and file that return. Right. So, but in order to determine that profitability, we got to start with the Schedule F, because like I told you on the analysis, we do the balance sheets on both sides, and then we essentially stick the Schedule F in the middle, and we bookend it with the balance sheets. But it all keys off the Schedule F, every bit of it. Now, as far as accounting records go, all right, there's a number of ways that we can do this. All right. Now, computer software, I guess when I first started, when, when I first graduated from college, I mean the big machine on the market. I mean, I'm going to date myself. There was this thing called an Apple II. All right, it was and it didn't even have a hard drive in it. You had these flexible floppy disks that we'd stick in there, and half the time they'd fail. So the reliability on this wasn't too much. I mean, I think I've got more computing power in my phone than what those old Apple IIs had. But we've come a long way with that. But computer software, the beautiful thing about computer software is that you can get the information plugged into the computer, let the computer do the adding and the sorting and all that, and you can just spit out a report. All right. Now, a manual record book. Now, I will say, when I was with the Farm Management Association, some of our highest profit farms kept manual record books. All right, that was, they just weren't comfortable with computers. Now a lot of those folks have retired since then. But uh, now, just to point out here, I'll hold this up in front of the camera here. This is a farm record book that's available through one of my professional organizations. It's if you want to jot this down, if you're looking at a hand kept record book, this is put out by the National Association of Tax Professionals, or NATP. All right, if you just Google NATP Farm Record Book, it'll pop up there. A single copy of this thing runs $7.68. All right, and but it's very easy. It's got an income section where you can write down your sales, and it's got an expense section that is going to essentially go column for column with the Schedule F. Now, the other thing that I want to mention on here, that you'll notice that there's reconcile, reconcile, reconcile. Regardless of whether you're doing the computer software or that manual record book, please start doing this. When you make an effort to clean up your records, start to reconcile back to your bank statement every single month. All right. And most of our software, whether you're using Quicken, QuickBooks, PC Mars, those are the three products that we're going to take a peek at before we're done today. If you're doing any three of those products, there's screens to help you reconcile back to the bank statement. What that ensures you of is that you've accounted for all cash that went through your bank account. You've also got that accounted for in your records. All right. Now, you still might have a coding error, but that's simple to fix. All right. Something might be miscoded, but if you've accounted for the cash, it's a lot harder to find missing cash than it is to fix a coding error. All right. So, that's something to get in the habit of doing. And there's YouTube videos out there to show you how to do that. I mean, it's easy to get started with that. Now, your basic components of a good farm record system is it's going to have several different pieces to the puzzle. There's going to be a section for farm income. All right. It's going to be separate from everything else. And we're also going to separate out the farm expense. All right. That's essentially the stuff that goes on the Schedule F. All right. Now, we also need to have a separate section for capital assets. Right. And the reason for that is capital assets get taxed differently from what your farm income is. Now, Livestock is probably the easier example to start with this, but let's say, for instance, that you're a cow calf operator. All right, so you've got mama cows, some bulls, and every year you're selling a calf crop. That's where you get your money out of a cow calf operation. All right, now the calves, when you sell the calves in the fall, right? Those are going to be raised stock sales. That's going to be considered farm income. That income goes on Schedule F. It's going to be Schedule F, subject to self-employment tax, and that's where it gets reported. However, all right, if you cull one of your cows, all right, that's breeding livestock. All right, you don't report the breeding livestock sales on Schedule F. They're considered a capital asset. We sell them under a different code because we don't pay that. They get taxed at a different rate, and we don't have to worry about paying self-employment tax on those, on the sale of those animals either. So it's to your advantage big time to make sure you get those reported correctly in your records. I've seen way too many times where what folks did is they sold when they did a cull cow sale, they all reported that on Schedule F, and they paid way more tax than what they were required to do. All right, so big reason why that's important. Now, I'm also a big proponent of keeping track of all that cash coming and going, and in order to do that, you do need to keep track of your loans. All right. And any of the products that we're going to look at today have the capability of setting up a loan. And what happens is when you borrow the money, you show that as borrowed money, and when you're making those loan payments, you've got the capability of breaking that out as principal paid and interest paid. All right, and it's just you may have one check, but part of it's going to principal and part of it's going to interest, and you have to kind of rely on the bank to get that interest amount. But that's actually very easy to break out. And final thing on here is I'm really big on tracking that family living, the personal income and expense. And we have a saying in the association: if it isn't written down, it doesn't exist. All right. Family living is one of those things where if you don't track it, you have no idea what's happening. And I know some folks just, well, if there's money in the bank at the end of the month, we're doing okay. And but that's one of the things on the family living side. If you track it, you can look at it. It might be something that you need to address in the future. All right, especially in a period of time right now, like we've got with with lower commodity prices for our grain and small grains. Well, coming back on I did a scan of this. This is a scan of that farm expense page out of that farm record book that I held up a few minutes ago. Now, this is just a cutaway. The farm expense side of things. This is only showing column 1 through 5. It's legal. I'll hold it up here so you can kind of get a scale here. It's legal size, but the column numbers go all the way over to 21 columns on this thing. So we're just seeing a very uh, short piece of this right now. On the computer side of things, now this happens to be a printout from PC Mars, which I'll give you more details on this. Now this is a software program that for any of our association members, this is the one that we try to get people to get started on. Also, we have an adult farm business management program here in Minnesota that got over 2,500 people in that program statewide, and our first choice to get people enrolled in that is to use this PC Mars program, largely because we turn on my laser pen here. The main thing that differs with PC Mars is you've got when you make the entries and when you look at the reports, you'll notice I've got a column for units. I've also got a column for weight. So if you're doing something with Quicken or QuickBooks, you don't have a capability of tracking like head numbers or weights or or the number of units. Period. So so if we're reporting sales, I want to put down the number of bushels of corn that I'm selling. All right. And this allows me to do that. And it's going to add it up when I get everything in there. So the units and the weight is really the big advantage to having an actual program that's designed for farming. Now here's the income side for that. This is also PC Mars, but you'll see here that I've got corn seed. I've got this is seed that's purchased, and we've got chemicals. We got marketing and storage, livestock supply, fuel. So you can see how this kind of breaks out and looks at that stuff. Okay. The key thing that I think we need to talk about, and if you're looking at getting your records straightened out for 2025, getting the chart of accounts set up is the critical thing at the very beginning of the year. All right. And the reason for that is the chart of accounts this is the list of categories or account numbers, or there's a lot of different terminology that we have on here, but what that is, let me back up here. Okay, the chart of accounts, when we look at this report here, the chart of accounts would be seed, crop chemicals, crop marketing, storage, crop drying. It's those categories that we sort stuff into. If you've got that list established and you stick to it, that is critical to keeping a good set of books. One thing that you don't want to do, and I've seen this oh so many times. Somebody's making their entries, and they're looking, and they just can't find that code that they're looking for. So what they do is they make up a new code. All right. And at the end of the year, you might end up with 6 different codes for fuel. All right. We can combine them all, but it sure is nice if we can get everything all just zapped into one, if we can do that. So it gives us a lot of consistency. Now, uh, this is something I'm not going to post, but I will tell you this: if you're utilizing Quicken, if you decide to go with Quicken, all right, I do have a a set of chart of accounts. These originally came from Oklahoma State, and I've got the old file from Oklahoma State that I could send you. That would work with an older version of Quicken, and I also have that set of chart of accounts that has been rotated into a 2024 set of Quicken, and I could send you a file of that, either one. So you don't have to you wouldn't have to set that up from scratch. All right, if you're using Quicken, what you can do is you can you just email me and I can send you that file. Okay, Harley, you got a hand up here. We got a question we need to address.
Yeah, there's two different questions. The
Okay.
first one is, will you talk about depreciation of stock?
I can just mention that real quick. The depreciation is something that's when you do depreciation, depreciation is going to be done on those capital asset purchases. So let's just say, for instance, that you bought a utility tractor. All right. And I just keep the numbers around. Say you spent $50,000 on a utility tractor. All right. The rules say that we can't just deduct the whole thing on that piece of machinery. What the depreciation rules say is we have to set that up on depreciation. We got to spread that out over time. If it's a new asset, it gets spread out over 5 years. If it's a used asset, it gets spread out over 7. We do have options to write it off fast, but we do that fast write off on the depreciation schedule. You pretty much need to rely on your accountant for doing that, but the job of the farmer in this case is to make sure that you've got that total amount that you paid for that new asset, make sure that you've got that on that. There's a code. We'll look at that when we get to the software, but there's a code for machinery purchased, and you just want to make sure that if I spent $50,000 on this utility tractor, I just need to make sure that I've got that down so my tax professional can pick that up and put that on the depreciation schedule. All right. Uh, Other question, yeah, I think Harley, I think you said there were two.
Yeah, the other question is Quicken the same as QuickBooks?
No. And I'll address this. Actually, if you don't mind, I've got slides that specifically address that. If you hold on, I promise you, we're gonna address that a little later in the program. All right, but good question. Good question. I will talk about that.
Perfect.
All right. Let's advance here. Okay, so folks, what I'm going to do for the next few minutes is we're going to trot through a Schedule F. And the purpose for that is the Schedule F, the lines on the Schedule F are going to exactly coincide with our chart of accounts. And you need to understand, if you understand the Schedule F, the records are going to make a lot more sense. All right. That's in a nutshell what we're going to talk about here. So, Schedule F, and that's for farm income. Anything that we have in the way of farm income is going to be going on Schedule F. Now, any of you ever here don't have this in the slide deck here, but there's also a Schedule C. C is in cat. All right. Schedule F is for farm income. Schedule C is for non-farm income. All right. So if you have a farm, all right, and you have farm income and expense, that's going to get reported on Schedule F. All right. If you happen to have let's say, say like a retail, something, retail establishment of some sort, like a gift shop or something like that. That's going to be a Schedule C unless you happen to be incorporated or something along those lines. All right. So, but Schedule F is where the farm income and expense is going to get reported. There's two ways that we calculate Schedule F. We can either be cash basis or accrual. And actually, when we get to page 2 of this thing, I think that's probably a better time to explain that. Harley, it looks like we got another question.
They want to know how animals depreciate or if they depreciate.
Purchased question is, if animals depreciate. Animals do depreciate if they're purchased breeding livestock. All right, so let's go back to the cow calf producer. All right, if if the heifers that I hold back are raised heifers, right? I didn't buy them. So those don't get depreciated. I really don't have any cost associated with them at all. But if I go out and buy a bull, all right, say for instance, I go and I buy a bull somewhere, that's purchased breeding livestock and that's going to get depreciated over 5 years. All right. Or if I go buy mama cows, or if I buy heifers or something like that, if I'm buying breeding livestock, that has to be depreciated. All right. It goes along the same lines as if you happen to be in the sheep business or the hog business. I mean, if you're buying breeding livestock, those animals get depreciated. All right. Hogs are 3-year property, sheep are 3, cattle are 5.
And there is one more question.
Okay.
If we are a farm business, farm producers product, we sell product and value added product via an online store. Do we need to put those value added sales on a Schedule C? The farm and the business are under the same LLC.
Okay. All right. Excellent question. Excellent question. It all depends on whether or not you're doing processing of the product. And let me define it. Let me give you an example that I see a lot. Uh, I'm in Southwest Minnesota. We've got all over Minnesota. We've got these apple orchards that have cropped up all over the place. All right, and they're growing apples. All right, when an apple orchard is selling apples, that's Schedule F income. All right, but now where it gets cloudy is if they start making apple pies, apple butter, jams, all sorts of stuff. If they're processing that stuff, that's Schedule C. All right, that's technically non-farm stuff. Or the money they collect from the corn maze would be another example of non-farm. The only thing that qualifies for farm in that apple orchard example is when they're actually selling apples. All right, once they process it, that's a processed product. It's no longer considered farm income. Right. Did I see another one pop up, Harley?
Yeah, there's a couple more questions.
Okay. All right. Fire
Is
away.
is it better not to uh is it better not to keep your own heifers and bring them into breeding? As in replacements, since they can't be depreciated.
Well, I think a lot of it depends on your management and your genetics. And this is kind of the farm consultant side of things, because if you're holding back your own heifers. Now, bear in mind, you're not introducing, when you do that, you're not introducing any new genetics at all into your breeding herd. Now, you've got the costs associated with raising that heifer to the point where you're ready to put her in the breeding herd, as opposed to, but there's nothing to depreciate there, but you also didn't spend a lot of extra money on her either. So, I think a lot of it really depends on if the operation calls for purchasing some new animals. If you're needing to introduce some new genetics, that's a fast way to do it. I mean, because typically, the bull is going to be half of it, and that's why people are typically buying bulls. But it just depends on, you need to look at your records and see if you're doing okay on birth weights, weaning weights, what's your calving percentage, and if those numbers are kind of falling off, then you might need to go and look at buying some different stock.
Okay, the next question is we have lots of questions. They keep coming in faster
That's
than I can
okay.
read them.
That's okay.
Uh,
Fire away.
so can you depreciate a milk cow, milk goat, or laying hen? And how are replacement hens treated on a Schedule F?
Okay. Okay, let's take this. There's several questions there. All right, as far as the milk cow and the goat, if you buy breeding stock for a cow or a goat, those are depreciable. All right. The chicken, you don't depreciate a chicken. If you're buying layers, or if you're buying chicks, you simply deduct those on it's the top of the Schedule F. You deduct that cost at the time that you buy them. All right, they're not considered a resale item. And when we get back to Schedule F, I'll point out where that goes.
Perfect. Okay, for my farm, if I sold farm products, I would use a Schedule F. I also do farm consulting and brought in income that way too. I assume the income from the consulting would go on a Schedule C.
That is correct.
Okay, perfect. For microgreens, equal once they are cut and placed into clamshell is at an altered state.
I don't think so. I think that's a farm product.
Okay. What about depreciation of working stock? Example, a cutting horse, as they would be considered a tool for working the herd.
Well, agreed. If the horse is integral to the farm operation, absolutely. If it was purchased, it gets depreciated. If it was raised, it doesn't get depreciated, because you don't have a purchase cost of it. But folks, there's a clear delineation between that horse that's being used in a ranch operation, and All right, I don't want to sound smart about this, but most people that have horses have them for pleasure. Now, I've been on the ranches where that horse is used all the time. It's a farm asset, and some folks try to deduct that when they say, "Oh, yeah, this is a farm horse," but you know, it's for pleasure. I mean, there's no business purpose for having that horse. And I think in the example that just based on the way the question is asked, it's a business expense.
Okay. And the last question as of right now is, can you depreciate the cost of artificial insemination costs versus purchasing a bull?
AI is going to be a breeding fee expense. That's going to, and there's actually a line for that on the Schedule F. So when if you're paying for artificial insemination, that's a breeding fee. You don't have to depreciate that, as opposed to if you buy the bull, you got to depreciate that over 5 years.
Okay, that looks like all the questions for now.
Okay, we're going to drive on a little bit here. Um, the Now the I wanted to touch on this just real briefly, and I don't want to hit this too hard. There, when you do your records, you could either be cash basis accounting or accrual basis accounting, and without getting into a big long accounting lesson, folks, I started doing the tax and analysis stuff in 1990. All right, this is my 35th year. In that whole time, I've only worked with two people that were accrual. All right. So it's not very common. Most people are cash, and you got immense flexibility because when you're talking about cash basis, it's when you get the income, you put it in your records and you count it as income. When you pay for something, you put it in your records and you count it as an expense when you pay for it. I mean, that's the basis of cash. In the cases of accrual, two things that change. If you say for instance that um, when you sign a if you're accrual basis and you sign a contract to sell something, even though you didn't necessarily collect the money, you got to book that money at the time that you do the deal. All right, so that's the one thing that's different with accrual. The other thing with accrual is you take into account those beginning and ending inventories, and they get reported on page 2 of the Schedule F. This affects such a small portion of the population. I don't spend a lot of time talking about that, but uh, this is something that you probably want to talk to a farm consultant or your tax preparer before you jump in to do accrual, because most folks, just for simplicity purposes, are going to remain cash, and that's perfectly okay. I really don't see a lot of advantage to either one. It's just a matter of personal preference. Right. Now at the top of the Schedule F, it does ask for an activity code, and if you look at this on the in the handout, there's different activity codes for different types of farming operations, and we just put that at the top of the Schedule F. It really has nothing to do with your records, but what happens with IRS when IRS looks at this thing is they're saying, okay, this is a cattle feedlot, so they're thinking, all right, this should look a certain way, and they're looking at certain things, and because if it's a cattle feedlot, obviously one of the bigger expenses is going to be feed. So they're perfectly okay with that, and that's one of the reasons why they identify that. So the top of the Schedule F is gonna kind of look like this. Again, I'm gonna get my laser pointer out here. You got your name up here at the top, Social Security or number or a tax ID number if that's applicable, and we've got that code, and then we're going to go through some of these numbers one by one here. Now on that cash income, line 1A and 1B. All right. Now somebody was asking earlier about chickens. All right. That cost of chickens, that's going to be going on line 1B. All right. If you're buying those chickens. And when you sell those chickens, they're going to be going on line 1A because those are considered resale. Now, chickens, we don't have to carry over to the next year, but the most common thing that you're going to find on this line 1A and 1B and nets out on line 1C is, let's say that you got somebody who's a cattle feeder. All right. Is so if I have a cattle feed lot, all right, typically what I'm going to do if I'm a cattle feeder, I'm going to be buying calves in the fall. All right. I'm going to be buying calves in the fall, and I'm going to put them in the feed lot, and I'm going to feed them over the winter. And sometime that next year, I'm going to send them to market when they're at market weight. Now, the key thing about resale is that when I bought those steers, when it's steers, when I bought those calves in the fall, I can't deduct those calves. I can't deduct the purchase of those calves until I sell them the next year. So that cost gets carried over. Now it's different with chickens. We don't have to carry that over. We deduct the chickens in the same year. Doesn't matter when they get sold because chickens are turning over constantly. So they're not, it doesn't take a whole year to grow it doesn't take a whole year to put a steak on the plate like like it does with the chicken. So that's the key thing there. With in the case of cattle or hogs, same thing is if I'm buying feeder pigs and feeding them out to market weight, again, I can't deduct that cost of those animals until I sell them. So I might buy them in the fall, but I don't sell them till next year. I have to carry that cost over. So in your records, we're going to label that as purchase for resale cost, and then I got to match that up with the sale of that livestock associated with that. Okay, Harley, I think we got another question here.
We got a couple.
Okay,
Would an indoor grow room slash farm fall under a greenhouse?
indoor grow room. I guess the question is what's being grown in there. I mean, is it business or is it just for growing uh you know personal flowers and stuff?
It says
That
microgreens.
so it's business. It's for growing business income. If it's microgreens, yeah, that would
Yes.
be business income. So yes, if it's part of the house, uh, I won't have time to get in this today, but there's a business deduction for use of the home, and what you can do is you can carve out however many square feet. You can actually take depreciation on that if it's attached to the house. All
It
right.
is part of the house.
Okay,
Then
there's a business use of home deduction that I would take for that because that's a business portion.
okay, the next question is, what if you have multiple operations, example, egg production and cattle? My question relates to the codes on Schedule F.
Okay, one more time on the commodities.
What if you have multiple operations, example, egg production and cattle? My question relates to the code on Schedule F.
Okay. Well, the eggs are going to be sold. The eggs are going to be sold on line 2, because that's just livestock crops raised. That's also going to be distributed. That's going to be reported on line 2. And okay, and then we had cattle also.
Yes.
Okay, if it's feedlot cattle, the cost the cost of the cattle are going to be reflected on line 1B when you sell them, and the actual sale of the cattle is going to be on line 1A.
They're asking about the 5-digit codes.
Oh, okay. All right. All right. All right. I've got to back up here and look. Well, this is where you indicate the principal amount. So the way to answer that is which enterprise is generating the most money. All right, what's the bigger enterprise? And if they're about 50-50, you just got to flip a coin because you got to have a code on there, but typically one's going to be bigger than the other one, and that's always what I do for reporting that.
Perfect. Thank you.
Any others?
The other one was related to the same thing, just
Okay,
different layers, so that it
gotcha.
answered both.
Okay, good deal. All right, so that the resale lines are 1A minus 1B get you 1C, so it's netting itself out. The line two is going to be that livestock and crops raised. Eggs would get combined in that as well. Now, line 3A and 3B. If you're doing business with a cooperative, now one of the things that's unique to a cooperative is you have to have ownership in the cooperative. But as you do business with a cooperative, the cooperative is going to pay back to the membership patronage. All right. Now, patronage is based on the amount of business that you did with the co op. And typically, what co ops do is say for instance if I did business with we've got a big co-op here in town called CHS and Senex Harvest States. And if I did business with Senex Harvest States, and let's say that I earned $10,000 worth of patronage, it was $10,000 they're going to give me back in the kind of in the way of a refund for the amount of business that I did there over the course of the year. What the co-op typically does is they give 20% of that back to me in the way of cash. And what they do then is they keep the 80%, but it's still mine, but they put it into an equity account. The co-op hangs on to that for a few years, uses it for capital needs and everything like that. But someday down the road, they're gonna give that equity back. But when I get that equity portion of it, I don't have to pay tax on it the second go around because I paid tax on it the first time around. All right. But you're going to get a 1099 PATR from the co-op, and that ends up going on lines 3A and 3B because you're going to end up paying tax on that. All right. See another question coming in here, Harley.
Does it matter for short-term income, example, honey for 2 years, beef for 3 years, and then later, like Christmas trees, 7 years? Can you change your codes year to year, meaning the highest income for that year?
Oh, sure, sure, sure. You're not locked in. I mean, just be applicable for the current year. All right. Line four, which is there's a 4A and 4B. Now that's if you're participating with a government program. Might also be like a state grant program or something along those lines. Typically, anything that's going to go on the government program line is going to be for it's going to be reported on a 1099-G. 1099-G is a 1099 that comes from the government, right? And if you've got government program payments, or say if you've got some kind of marketing assistance or anything coming along those lines, that's going to be reported on lines 4. All right. Now, CCC loans, I'm going to ratchet this up just a little bit uh, on this, but on the CCC loans, in fact, folks, I guess I should clear this up. The Schedule F still says CCC loans, but Farm Service Agency actually changed the name of this to Market Assistance Loans. But what a CCC loan is if I've got grain in storage, I can go across the street over here and go to the FSA office, and I can take out a loan against that commodity, and I have the option either to treat that income as a loan, or I can treat it as income. I can treat it as taxable income on the tax return. And if you're needing to generate income at the end of the year, that's a quick way to get it done. Okay, Harley, we got another question.
Yeah, there's two. What about our NRCS high tunnel grant?
That typically is going to be now it depends. That's one of those where uh, and I appreciate the question. This is one of those where I always encourage folks. Um, make sure that you have a conversation with your tax accountant on that, because most cases on those NRCS grants, what's going to happen is it's considered income, and you have to report that as income, but it depends on what kind of a 1099 that it shows up under, as to where we have to put it on the tax return. All right, if it's a 1099, if it's 1099 miscellaneous, we're typically going to put that under other income. But then we turn around and we expense we count it as income, but we expense the high tunnel that we're going to build. So those two tend to kind of wash out themselves. You need to report it. If it comes on a 1099, you got to report it somewhere on the tax return. All right. Otherwise you end up getting a nasty gram, because those nasty grams from IRS, they're computer generated. Okay. Was there another one?
Yeah, the second question says,
Okay.
if I'm raising beef cattle to have butchered and sell individual cuts of meat at a farmer's market, is that considered farm income or non-farm income?
Non-farm income, because you're processing it. So what I would do in that case is, you need to talk to your accountant. But the way that I would handle that is, I would show, at the time that you butcher the animal, I would show that animal as, uh, I would show the expenses for growing that animal on the Schedule F. I would put an income figure down for what the animal was worth, and then I'd end up selling the retail cuts on the Schedule C. All right, so it's kind of a resale thing, but the sale of the retail cuts has got to show up on a Schedule C. All right, but that gets to the point where you really need to be talking to your accountant on that. All right. Um, okay. Any more?
That's it for now.
Okay. All right. Uh, crop insurance, so line 6. All right. So typically, crop insurance is going to show up on a 1099. But as you collect it, you want to be putting that into your records. So the you want to have the crop insurance down there, and you want to have that, try and tie that out a little bit. You might also have line 7. I mean, income for custom work. Now, it's not uncommon for a farmer to maybe do a little bit of work for a neighbor. I mean, when I was a kid, we used to bale hay for the neighbor all the time, and but it was a small portion of the overall farming operation that we had when I was a kid. All right. Now, what I always tell folks is, on this custom work business, if the custom work is a major portion of the farming operation, it probably isn't Schedule F. It's probably Schedule C, right? But if you got $200,000 worth of farm sales, and you got a couple $1,000 worth of custom work coming in there, don't do a separate filing for that, because it's de minimis. But uh, line 8 is, like, if you got fuel tax credit refund, or if you got 1099 miscellaneous, oftentimes that's where that's going to get reported as well. And then line 9 just simply adds it all up. That's your gross farm income. Sorry. So when we look at the expense side of things, this is the bottom part of the Schedule F. And if you want to, this again is part of that PowerPoint file. Uh, Let me run through these rather quickly. The income gets really complicated, but on line 10, okay, if you got car and truck expenses, now these would be probably actual expenses, if you're deciding to do that. Now that would be like your insurance for the business portion, repairs, uh, plates, tags, licenses, that things along those nature. Now, the thing that I always tell folks is that, I've been through a number of audits, and what you always want to do on these situations is, you always want to be able to identify, what portion of this was business, because I've had clients that walked in the door, and I mean, they got 5 vehicles on the place, and they want to take 100% business use of all the vehicles. Well, folks, that can't possibly be true, because I mean, there's some family living personal amount that goes in there. So there's some de minimis safe harbors for the pickup truck. I mean, if you got a pickup truck on there, you can just take 75% business use, and you're not required to have any kind of a logbook or anything. And I always encourage folks to just go that 75%, because if you're trying to do more than that, I mean, we all know that pickup's getting used for personal use a little bit of the time, but IRS will let you have 75%. All right. So if you've got chemical expense, all right. So herbicide, insecticide, any kind of chemicals. Line 12 is conservation expense. Now that's going to be like dirt work that you had. If you had, ditch digging, or building terraces, or some type of uh, drainage expense. That's going to be a line 12 thing. Custom work hired. Now, if you hired somebody to come in and do some dozer work, for instance, all right, and you paid them custom work for that, that's where line 13 goes. Now, depreciation, that's line 14. That's rolling over from a different form. Depreciation gets calculated on the 4562, and that total ends up coming over to line 14. So we actually don't calculate depreciation on the Schedule F itself. All right. If you got employees and you have any kind of benefit that's getting paid to them, for instance, if you're providing some health insurance or retirement plan or something like that, that's where that stuff goes on line 15. Uh, in the livestock operation, feed purchased. All right, that's going to go on line 16. If you're buying fertilizer or lime, that's going to go on 17. Any freight, whoops, excuse me, freight trucking expense. All right, so if you've got some trucking expense, that's going to go on line 18. Your fuel, oil, and gas. All right, that's going to go on line 19. Now, again, this is one that IRS is going to scrutinize if they ever look at your return, because it's awful easy just to put that total amount that was spent on that line, even though a portion of that might be for personal use. All right, so this is intended to be business use of that. Insurance other than health insurance is line 20. Your interest paid is going to be on lines 21. And the reason why there's a 21A and 21B is 21A, well, it differentiates. There's other interest, and then there's mortgage interest. Mortgage interest gets reported on a 1098, and that number needs to match up on the tax return with whatever you had on a mortgage interest statement. And any labor hired, that's going to be a line 22. That's total wages paid. So if you got pensions there that are for employees, that's a line 23. Line 24 is going to be rent and leasing of equipment and machinery. All right. So if you're renting land, or if you're renting a piece of machinery, that's gonna go on line 24, line 24. Now repairs go on line 25, and I've got another slide on that. So there's some stuff on tangible property that we'll talk about here in a moment. But if any seed that you buy, line 26, storage and warehousing, that's going to be line 27, and okay, I thought that was okay. I'm going to go back on this. Here's the thing on the tangible property regulations, or we just kind of affectionately call these things the repair regs. The For a long time, we had tax professionals had a horrible time trying to sort this thing out, because if you I mean if you a lot of times repairs were kind of expensive. 20 some years ago, I had a client that uh, sent the combine into the implement dealer for essentially belts and hoses. I mean, after harvest, and the bill came to like $7 or $8,000, and this client ended up getting audited, and IRS said, no, you can't count that as a repair. You're going to have to depreciate it, and because they said it was a capital expense. Well, I disagreed, but we ended up losing that one. But what these tangible property regulations is, they gave some clarity that if you're doing something as part of the repairs and maintenance, or like regular maintenance that's done on a regular basis, we can count that as a repair. All right. The other thing is there's a safe harbor that we can follow, and essentially, if I've got an invoice that I've paid, and it's under $2,500 for that invoice, I can just count that as a repair, and they're not going to care. All right. Now, the difference is if I've got an applicable financial statement, and that's essentially an audited financial statement, which you got to be a huge producer in order to have that done. For most people, it's going to be a $2,500 safe harbor. Harley, I see a question there.
Does startup costs from 2024 be filed on 2025 Schedule F? And it says in parentheses, filing in 2026.
A startup cost. All right, so they're starting up the business.
In 2024.
Okay. Well, there's they need um I guess the question is, when do the operations actually start?
2025.
Um what I would do is I would report it. Well, then if the operation started in 2025, it's going to be reported. Well, you've got income and expense. So they spent money, but they didn't start operations until 2025.
Correct.
Um, folks, there's a multitude of additional questions I got to ask on this, and this is one that I'm really need to encourage this person to defer to their accountant on this, because they may want to. It depends. They might need to file some of that stuff on the 24 return, or it may end up getting kicked over to 25. I mean, and there's a lot of facts and circumstances that are going to affect that. It's probably deeper than what we can get into today. So I hate to do that to you, but that's one where you probably need, if you haven't found an accountant yet, that's something that you need to do. Were there others, Harley?
That was the only one.
Okay. All right. Um, so moving on with this, the rest of this is kind of self-explanatory. Now supplies, that's like if you go to Farm and Home and you buy like twine or wire or something along those lines, just miscellaneous supplies. Taxes is going to be just your property taxes. Your income tax does not go on here. I mean, this is only property tax. Income tax paid is not going to be deductible. Utilities, and again, on the utility side of things, you want to be careful that that's the farm portion of it. Problem is a lot of times there's only one utility bill that comes for the farm. The house is hooked up to it, the barn is hooked up to it, and you need to do a reasonable allocation. Vet breeding and medicine, somebody mentioned the AI work earlier. That's where that AI expense is going to occur, is under the vet breeding and medicine. And then line 32 is other expenses. Now, folks, be careful lumping too much stuff into this. I guess I've had folks that brought me records, and holy smokes, I mean, they had tens of thousands of dollars of uncategorized stuff, and they just said, "Oh, we'll just stick it under other." You don't want that other expense to be too large compared to everything else, because that just entices somebody to come and say, "Well, what exactly is that made up of?" So when you look at the bottom of the Schedule F, you add everything all up. You got line 33 adds everything up, and then you subtract the income from the expense on line 34, and then on the tax return, the net from the Schedule F ends up going over to Schedule 1 on the 1040, and then it flows through from there. So the bottom of this thing kind of looks like this when you get done with the tax return. And this was actually a case study that I used earlier in the year, that it has really nothing to do with the webinar here today, but it was filled in anyway. So on the back side of this, just real quickly, accrual, if you happen to be accrual filer, on the back side of the Schedule F, there's additional numbers to report. The key thing on this backside of this Schedule F is you're going to have to report those beginning and ending inventories, right? And that is used to calculate that profitability if you're accrual. Now, if you're a brand new operator and not really familiar with records, don't do accrual. All right, just stick with cash. That's what 99% of the population does, and in this case, they're not wrong. I mean, just stick with keeping it simple. Now, that's the Schedule F as far as the chart of accounts go, and it's really critical that you get that that you get everything that's going to go on the Schedule F coded as it's going to the Schedule F. The on the other thing that I think is important to understand is the 4797, because that's where the sales of your capital assets are going to incur. In other words, if you're selling breeding livestock, if you're selling a bull, if you're selling a cow, if you're selling a piece of machinery for something, this is where it's going to get reported. So it doesn't, these sales don't happen on the Schedule F. You don't want it to go on the Schedule F, because if you put it on the Schedule F, you're going to pay a higher tax rate, right? And I'm not anti-tax, but I don't want to pay any more than I have to. All right. I think that's easy enough to understand. Uh, the parts here, this was I should have took this out. This was from a class I did earlier this year that probably should have taken this out. This is kind of immaterial. The point is we want to identify those capital assets, and we need to code them that way on the return. And then the form itself, we're just gonna kind of skip over that. Okay, so let's uh let's go ahead and hit this right now. I promised earlier that what I would do is I would kind of do a real quick discussion on three different products that we use uh, here in uh, with our farm management association and everything. Harley, why don't we do that question here quick?
Okay. How does one deduct farming operation utility cost from the house? Example, water and electricity. How do we calculate the percent usage without paying for a separate meter installation?
Well, I think you have to do a reasonable allocation, and the only reason that you would use the house portion as business is if you happen to have a office in the house and you're using, for instance, a business office. I think you can take a little bit of that, but I think what you have to do is you just have to do a reasonable allocation. Now, uh, if and a little bit of it depends on the operation that you have. Now, if you've got a farmer, that I'll just use a Southwest Minnesota farmer. If a typical farmer around here is growing corn and soybeans, there's a little bit of livestock south of here, and well, the poultry houses are all north of here. The hog facilities are south of me. I mean, right here, there's not a terrible amount of livestock, right here where I'm sitting right now. So if you got somebody that's just growing corn and soybeans, right? There's the house, and then there's the machine shed. And yes, there's power going to the machine shed and everything, but that power in the machine shed is a minimal amount of power that's being used there over the course of the year. So, uh, yeah, there's a deduction there, but in that case, probably the majority of that power is going to the house. So now, if you have, for instance, let's say, for instance, that you have a livestock confinement facility. Say you're raising pigs in a confinement building, where you've got fans and ventilation units, and you've got water running 24/7, and there's constant power going to that house. Then there's going to be a substantial business deduction there. So it's just something that you have to look at depending on the makeup of your operation. And I hope that makes sense, because you have to do a reasonable allocation, whatever you can justify. Okay, was there any others?
No, that was the only question.
Okay. Let's look at this scenario. What I want to do is I want to look at some of these software options, and I do have these loaded. Before we're done, I'll pull these things up and kind of show you what they look like. But excuse me. The Now the first one that we want to talk about is PC Mars, and we're also going to talk about Quicken, and we're also going to talk about QuickBooks. Promise this earlier. So let's look at PC Mars first. Now, uh, PC Mars is a product that it comes out of Iowa Farm Business Association. This program has been around since the late 1980s. I mean, it's been around for a long time, and uh, this is kind of our first line. This is the first program that we recommend for our association members, and a lot of the FBM instructors statewide will recommend this, and it's a matter of personal preference. But the thing that I love about PC Mars is it is a farm program. It's got, the chart of accounts is already set up for you. You can pick and choose what you want to use, and it's got that column where you can keep track of quantities and weights. Right. So it's easy to track bushels, it's easy to track pounds, and everything gets added up in the program for you. Now, cost wise, and I put this in the material here. Cost wise, in fact, I just renewed my PC Mars. It was $80. It's $80 per year per set of books. So if you're a sole proprietor and you only have one set of books, you can get by with $80 for the year, and you're going to have one set of books. When you go into 2026, you'll have to renew it, and you'll have another set of books. Be $80 the next year. But you do have entries for units and weight. The other thing that I want to point out here, and I'm not, and I don't, I'm not a salesman for these folks. Uh, People, please understand, I don't get a commission for doing this. But this is a software program that works really well for farmers. They do have add-on modules if you want to do inventory control. That's called PC Mars Plus, and the beautiful part about that is it's inventory control. So if you got a farmer that starts the year with, let's say they got 100,000 bushels of corn in inventory, well, they set that up in there. They start with that amount of inventory, and as they sell, it decreases that amount that's on hand. You do the same thing with commodities, same thing with livestock, and when those folks that have the inventory control come in to do a FinPack analysis, it's a breeze because the inventory and everything is all in the accounting program. So it takes a lot of the work out of it for the analyst there. The other thing that's available there, and this is a typical farmer's not going to need this, but there's an accounts payable and accounts receivable module. So if you were doing billings or sales or anything like that, for instance, some of your value added sales that were mentioned earlier on here, that might be a component that you want to do. They also have a payroll module. Now the payroll module has the withholding tables built into it. So all you have to do with employees is you just set up the employee, you put the W-4 allowance in there, and then all you got to do is go to the screen and just put the number of hours for the pay period in there, and bam, it calculates a paycheck. All right. And PC Mars does a wonderful job of calculating those payroll deposit amounts and tracks those for you. I mean, it's a really nice interface for that. You don't have to have the payroll module to do payroll. You have to have the payroll module to have the payroll tables. But if you want to just enter payroll manually, you can do that with the base program. Right. But that is a really slick program. I highly recommend it. Now, Quicken. Now, Quicken has been around. Oh shoot, Quicken's been around since the mid '90s, and it's put out by a company called Intuit. Now, folks, it is a checkbook program. All right. All it does, it's going to do a real good job of keeping track of your cash. We can help you set up a farm chart of accounts in there so that when you enter your stuff, you can code the feed as feed, the fertilizer is fertilizer, and the seed utilities. You can categorize everything the way you would need to, and it'll spit the reports out. What it lacks is you don't have that capability of tracking weights or quantities. All right, it's just tracking the dollars. Now, Quicken has moved to an annual subscription. You used to be able to just buy the software off the shelf and use it until you got sick of it, and you went to buy a different version of it. But now I utilize this for doing some of the accounting for one of the nonprofits I work for, just because it's simple. And what I had to do is every year I've got to pay. I think I got to pony up like $70 every year to renew that so that I got all the features of the program, and it gets support. But that rate can run anywhere from $50 up. It depends on which module that you're buying. Harley, yes, question?
If we stop doing something because it's no longer profitable, example, breeding animals, do we have to do something special as we liquidate those things that we had to?
Repeat that one more time.
Yeah, if we stop doing something because it's no longer profitable, such as breeding a specific type of animal, do we have to do something special as we liquidate those animals or quote unquote assets?
Well, no, because well, let's say for instance that you decided that you were, let's say you were in cow calf operation and you decided, okay, we're going to get out of this and do something else. If you had calves on hand and you're getting rid of all the calves, well, the raised calves are going to get sold on Schedule F, and the any cows that you had are going to get, or they're going to be sold as capital assets. Raised cows are going to go in, the raised cows will be sold on 4797. Purchased cows will be sold on 4797, and you're going to have ordinary gain and probably some capital gains involved with that. But no, you just essentially you report the sales on either Schedule F or 4797, but in your records, what you're going to report is if you sold the calves, you need to report those as, calves sold. And if you sold the breeding stock, you report that in the records as breeding stock sold. Now, when you go talk to the accountant, you're going to probably have to identify them a little more beyond that, because the accountant's going to ask you, all right, were these cows raised cows or were they purchased cows? And hopefully that they've got, if they were on the depreciation schedule, accountant's going to need to sell them off the depreciation schedule. All right. So but moving forward, if you're doing a different enterprise, if you had your Schedule F marked as cow calf, and you're no longer in cow calf the next year, let's say that you're more of a, say you were to go to a greenhouse or a row crop type of operation, you just change your activity code on the top of the Schedule F.
It says, what about pins and handling equipment?
One more time.
Like working facilities, handling
Oh,
equipment?
okay. Uh, well, the pins, any say like say let's say you had some WK panels or something like that for a corral or something. Now, when you bought those, they should have been depreciated, and if they weren't, if they were just expensed and you sold them, I would still sell them as a capital asset, because that's not Schedule F. I mean, I would code that in your records as machinery sold, because those should have been depreciated at the time that they were bought. They might have been expensed, but they still should be sold on. They should be sold on 4797. You don't need to pay self-employment tax on that.
That's all the questions for now.
Okay. All right. Um, let's see here. We hit okay, that was Quicken. Now, QuickBooks. Okay, because now let's back up here a moment. So, folks, Quicken is more or less a checkbook program. It was never originally designed to be a business uh, to be a business accounting program. All right. But you can do it that way as long as you got the chart of accounts set up to where you can code stuff for farm codes. It's perfectly fine for doing that. But just remember, it's nothing more than a glorified checkbook program. Now, QuickBooks is more of a business software program. All right. Now it's designed for doing business. Now, my personal opinion is I don't steer people towards QuickBooks unless they're either going to do they either need to do payroll or they need to be able to do accounts payable, receivable, and invoicing. Right. So if you've got a business where you need to be able to send invoices and bills to people, to customers, and this is very likely non-farm business type stuff, that's that is better suited for QuickBooks rather than Quicken. All right, Quicken doesn't have those business features that are part of that. Now, it's also QuickBooks is a little more to manipulate. You really need to have a better understanding of accounting principles if you're going to be successful with QuickBooks, because I've had people that got into QuickBooks and it's real easy for them to get messed up. Case in point, when you get into QuickBooks, you've got all these asset codes that you can use, and they don't show up in the places that you think that they should. Case in point. Again, this person wouldn't mind me using this example. Several years ago, I had one of our association members. I was going to do their FinPack analysis, and when I do a FinPack analysis, it does a cash check. I mean, what it does is it starts with when I do the FinPack analysis, it starts with what the cash balance was on January 1, and it ends with that cash balance on December 31st. And it looks to it compares everything that we entered in as far as farm income, farm expense. It accounts for all the cash, and if something doesn't make sense, it gives me an error. And what ended up happening was this client had prepaid some fertilizer, but had coded it as an asset account, and it didn't show up on the profit and loss statement. And when I did the FinPack analysis, I was coming up exactly the amount of money off that she prepaid for this stuff. So when we did that cash balance, that we picked up in this case it was a $60,000 expense that we picked up that we wouldn't have reported on the tax return had we not caught that when we were doing the farm analysis. So another reason to, really dig into this stuff, because sometimes these mistakes can be huge. And frankly, you find a $60,000 mistake on that favors the client, that person still thinks I walk on water. I don't, but you know what I mean. But the thing with QuickBooks is it's expensive. I mean, I think the cheapest version of QuickBooks that you can get right now is going to be about $250 a year, and it can get a lot more expensive than that depending on what modules that you're adding to that. QuickBooks is not cheap, and that's one of the reasons why I say, when you start comparing this like to PC Mars, which is $80 a year, for the base model, you might want to take a peek at that, because PC Mars has a free demo that you can download and you can mess with for free. And that's something that I'd recommend doing on that. Now, but some accounting experience is probably preferred. Harley, did I see a flash coming across with a question?
They were just asking if I would send out the recording of this webinar,
Oh, sure, sure.
and I already
Okay,
answered it.
okay. I'm gonna stop my share, and what I'm gonna do is I am going to share my. Okay, hold on here a moment, folks. I'm gonna start with PC Mars.
While you're doing that, we did just have a question come in. It says, "Does Mars enable you to scan in receipts?"
No, no, it does not, and I think that is an option with QuickBooks. I think we'll do that, but QuickBooks will do that, but um, not PC Mars. Okay, hold on here a second. PC Mars, okay.
What about using Excel as an accounting record?
Excellent question. And frankly, okay, hold on one second. You can chuckle about this if you want. I have trouble chewing gum and walking at the same time here. So um, let me get this shared and get this shared and then we'll go with that. Okay, got that over there, and okay, let's get that over there. Okay, now back. Repeat that question one more time, and then I'll address
What
that.
what about using Excel as an accounting record?
The that that certainly works. Now the only and it can potentially be very accurate. The only problem with doing that and what they're talking about is setting up all the chart of accounts as columns across the top of your Excel spreadsheet and just drop the numbers in as you go through. The only problem with that is it's just about impossible to reconcile that back to the bank statement, and that's the key thing. See, any of these, PC Mars, Quicken, QuickBooks have screens that are available to do those reconciliations back to the bank statement, and that is really, really critical. I mean, I've had people find huge mistakes. I mean, over $100,000 mistakes, and it is so important that you balance your cash, and that's the term that I use, is balancing the cash. So that's the only downside to that. And the other issue is, if you find a mistake, it's really hard to figure that out, and because you don't have, it's hard to find a mistake once you determine that you've got a mistake in there.
Okay, there's two questions, but I have one thought slash question to what you just said.
Hmm.
What happens? I've potentially looked at utilizing QuickBooks myself, but I utilize a small town bank and they do not uh, connect to my bank. So you can't reconcile those bank statements. QuickBook doesn't do that. So is there something that I could be doing potentially? Because I'm sure that I know, as our family farm even uses a very small town bank, that you just can't access it.
Well, you can still access it. The thing is, you're just not going to be able to access it. When you load a new version of Quicken or QuickBooks, it'll let you, like, hey, again, not advertised to anybody. I got an account. I've had an account with Wells Fargo for 30 some years. All right, so I can go online with that, and I can connect to my Wells Fargo account and everything. Now, I don't do that for security purpose reasons. I can log on to my portal with Wells Fargo, and I can pull up anytime I want. I can pull up any of my bank statements. You look at a online copy, and then I can, on my other side of the screen, I can pull up my reconciliation, and I can pull the numbers. I got the bank statement on the left screen. I got the accounting program on the right screen, and I just fill out the reconciliation piece while I'm looking at that. I mean, you're still going to have access either to a paper copy of a bank statement, or you can access uh, a printable copy of a bank statement online with most of your banks. Even the smaller banks have a portal where you can log in and look at your bank statements.
Okay. Yeah, that makes sense. I was just thinking as far as that's why I utilize Excel and don't pay for anything, is because you
The,
can't
the,
import it.
Harley, there are some things that I'm still really uncomfortable importing now. Now, maybe, that's just, let's face facts. I'm chronologically challenged, and I still kind of like doing some things the old-fashioned way. And I'm not real crazy about loading an accounting program and then logging into the bank and letting that bank, come in and, I really don't want the bank having all kinds of access to that sort of stuff. So, not that I'm trying to hide anything or anything like that, but I want to know what's going on. And because I've had I've had bad experiences with that before. So I'm kind of old fashioned on that.
Yeah, that makes sense. Okay, so the next question is, what was the name of the sheet you mentioned at the beginning that we could download to help analyze our expenses or slash income?
Oh, it's well, it's not necessarily a sheet. It's a program called FinPack. All right, FINPACK. Now it's a software program that the university sells. Now I would not recommend somebody that's getting somebody brand new to farm accounting. I wouldn't recommend going out there and because that's like jumping a quantum leap to do that. Most of our folks that use FinPack are going through a farm management instructor or some type of a consultant. Now, one other less expensive option that I will share with everyone is now University of Illinois has they've got a program. Well, their program is called Farm Doc. Their website is called Farm Doc. Farm DOC. And what FarmDoc does is FarmDoc has, oh, I bet they got 50 different Excel spreadsheets. But they've got an Excel spreadsheet where you can analyze your farm. You got to put in your balance sheet information and it'll generate an income statement and everything. It doesn't cross-check your income like FinPack does, but for a beginner, it might be a good cost effective solution for that because those farm doc downloads are free. All right, and you just go to farm doc, go to farm doc, just search up farm doc on Google, and it'll take you. It's University of Illinois extension, and it'll have the list of those Excel templates that you can download. All right, probably more information than you needed, but those are a couple other options.
The next
Any other
question, yeah,
questions?
we got a few more.
Okay.
Any thoughts or experience with Ambrook, Ambrook?
Unfortunately, I've never heard of it. I'm sorry.
That's okay. The next question, does PC Mars import bank statement transaction for reconciliation?
No, you have to go to a screen and you have to drop like that beginning balance and ending balance and then there's a screen where you check off all the cleared transactions. Right. So it's a manual deal, but it takes no time at all because all you're doing is you're entering the beginning and ending information from the bank statement and then you just check off all the cleared items.
The final question for now is, can you please share some best record keeping practices for loaning personal money to the business? Also, some best practices for paying myself from my business.
I'm assuming, uh, well, let me, okay, I'm going to ask a follow-up question and then I'll come back for that. The individual that just asked that needs to let me know, are they a sole proprietor or they have a formalized entity like an S corporation or an LLC or something like that? And I'll come back. I'll come back on that. Um, Folks, this is, I believe, Harley, are you seeing the PC Mars screen?
Yes.
Okay, this is really tiny, and I know this, and this was a concern that I had. But as far as PC Mars go, it's essentially menu driven. This is a sample. This is a sample farm from 2021, so the transactions on this are going to be old. But it's pretty much driven by if I want to if I want to if I want to write a check. All right, what I did is I just, there's an icon here to write a check, and if I want to pay to the order of the co-op, now, say I'm going to pay to the order of the co-op, and it's defaulting to 2021 date for the simple reason that this is a 2021 set of books. If I'm going to write a $2,500 check, And then what I have to do here is I have to allocate this all out. So if part of this check was say fertilizer, and see what I'm doing on this code, this is that chart of accounts. All right, so it's pulling it down. I've got everything from crop insurance to, this is the Schedule F stuff that we just talked about. All right. So if I'm in this case I'm coding that a 402, and I do the whole thing for 2500, and we just go ahead and we go ahead and post this thing. All right. Oh, I see what I did. I mean, you see what it did here, folks? This is actually good for you to see. I accidentally entered 25,000 in here for a $2,500 check. All right. And it says, no, can't do that. So I've got to fix that. Now this amount down here at the bottom has to be zero. Now it's going to let me save that. All right. So check wise, the other thing is that we can do is we could do multiple allocations on this thing. I could pay a bill to the co-op, and we just keep adding lines down here at the bottom. If we had fertilizer, chemicals, seed, just go on and on there. We'd allocate this thing 20 or 30 times if we wanted to. We're just going to key that stuff off the bill. All right, so I'm going to close this. The income screen is going to look very, very similar to that. Actually, you see whether I can blow this up just a little bit. So, again, if I've got sales here, for instance, let's say that I've got a $20,000 sale. Put a comma in there, that would help. Oh, I don't want 200,000. As you can tell, I mentioned earlier, I can't chew gum and walk at the same time. So, vendor wise, if let's say I'm selling this to CHS, which is our local co-op, and code wise, let's say I was selling corn, which is my code 301. I need to get the 20,000, and it did the same thing. Okay, I've got that down to zero, and see that then I've got this all allocated out here. So I could save that, post that, and that's where you're going to spend most of your time. Report wise, report wise, there's a detail report that we can pull up here, and I'm just gonna pull up the detail report, and see here. This is gonna pull this up again. Okay, Harley, are you seeing that report, or do I need to reshare that?
No, I see the report.
Okay, all right. So what you see here on the report, this is, this again was some sample data that's in here, but this is a PC Mars report, and it's got this sample data has some loan payments that are in there. It's got some CCC loans. There's uh, there's corn, soybeans. There's some raised hogs. There's uh, there's some breeding hogs that were purchased, and it just goes on down the line, and it's got all the different categories that are broken out. This is the kind of a report that an accountant loves, because it explains everything. It gives you the right amount of detail, and it's really easy to get everything punched in. All right. Harley, I see there's a question coming here. We'll go ahead and ask that while I'm shifting gears here. I'm going to switch over to the different program.
Does PC Mars have generic COA already installed?
Well, yes, there is a farm chart of accounts that is already built in, and the what happens with that is it gives you an overall chart of accounts. And what you can do with that is you can go to the setup, and you can click what you want to use, and you can unclick the stuff that isn't applicable for you. All right, so the setup is really easy, or you can go in and you can custom set up some additional codes. All right, and the training material for PC Mars, there's all sorts of material. showing they got a multitude of well, there's a couple different training manuals that I've used when I've taught workshops for that, and it really is slick.
And we did get the information on the original question. Can you please share some best record keeping practices for loaning personal money to the business? Also, some best practices for paying myself from the business. The business is an LLC.
Okay. First of all, with an LLC, the general assumption is that it's filing as a partnership. Now, you may be a single member LLC, which that's going to be filing on a Schedule F or a Schedule C, but you have an LLC set up. If it's a multi-member LLC, you're very likely filing that as a partnership return. In a partnership, from a taxation standpoint, you are taxed as a partnership, and you don't really pay yourself a salary under those circumstances. What you do is you take a draw. All right. So if you have a multi-member LLC, you're going to be you need to set up yourself so that you're able to take a draw. You take money out of the business, and then that gets calculated as part of your capital account calculations when you file your tax return. All right. So but you do in an LLC, you do not give yourself a W-2. Right. That is something that you don't do. You take that money as a draw out of the partnership, and then you end up reporting that money that you took out of the partnership when you file the partnership tax return. Right. And I hope that as far as loans go, now the LLC can take out loans. uh as you know, the LLC can be the borrower on a loan, but there's not a bank probably on the planet that's going to allow that without you co-signing as a personal, doing a personal guarantee on that. So just expect that. But you can, the LLC can borrow money, but a lot of times, they're going to somehow collateralize that loan, or you may end up possibly uh, possibly having to co-sign on that personally. But that's going to depend on your personal situation.
No other questions at this point.
Okay. Uh, Folks, I switched over, and now are you seeing a software screen now
Yes.
as well? Okay, folks, what I did is I switched over to this is Quicken. All right. Now, we were looking at PC Mars earlier. This is Quicken. And what I'm going to do, this is a 2025 account that I literally set up, I think Friday last week. So what I'm doing is I've got a farm checking account set up in this, and I'm just going to go ahead and make an entry here as of today. If I've got check 1005, and let's say for instance that I pay the co-op, and you can do a memo here if you want to, but the whole idea is on on the as far as the categorizations go. I've got those chart of accounts imported in here from that from that Oklahoma State data is what I've got on here. So if I was buying feed, for instance, okay, I've got feed purchased, and let's say that I spent $10,000. All right, now I've got a negative balance here right now. So if I want to go in here and sell some corn, for instance, all right, I'm going to go to ADM, and I'm going to sell corn. Just going to set that up, and say I sold $20,000 worth of corn. Now my balance is back into kilter. The other thing I want to show you here quick is let me do another co-op transaction. One thing that you can do with Quicken that I really like is you can do a split. All right, and what you can do if you've got this multi transactional piece there. Let's say you had a bill where you had fertilizer, chemicals, seed. you've got multiple things on your invoice. What you do is you fill out a line here and you code each individual until you spend all the money on that particular transaction. All right. Now I'm going to go ahead and cancel this out just in the interest of time here. Report wise, in Quicken is really simple. There's a reports and graph center where if you want to do like banking reports. I mean, there's cash flow reports. If I wanted to show a report, see now this is what we just punched in just now. I mean, I've got I've got corn sales and I got feed purchase shown here as well. So that's all part of that. And but main thing with Quicken is it's simple, it's a checkbook program and it's easy to keep that bank balance straight, and there's nothing fancy about it. It doesn't allow you can go into the memo and you can put like bushels or pounds or head counts or something like that, but when you spit out the report, it doesn't add up the stuff within a category. So if I put a bunch of corn sales in here, it's not going to add up all my bushels. All right, so you got to go with PC Mars to make that happen. All right. Uh, I'm going to go ahead and close this out. Not going to save this. All right. And I stop the sharing. All right. I'm going to pull up one more thing. I wanted to show you folks a real quick deal of QuickBooks here. Let's share. Okay. Now, the thing about QuickBooks, now, first of all, folks, I want to make sure we really are clear about this. This is a copy of 2019 QuickBooks Pro. All right. This is not the current version, but the current version is going to look very similar to this. All right. But this is no longer a supported piece of software. But the new one is going to look quite a bit, it's going to look quite a bit similar if you were to get a current copy. Now, if you look at the flow charts here, this is where I say you need to kind of have an accounting background in order to understand this, because we've got interaction of accounts payable, entering bills, paying bills, and you can get into this, and literally what you can do. When I do work with QuickBooks, most of the time I'm spending 99% of my time over here. There's a check register icon, and when I do the check register icon, let me blow this up so you can see it. You end up with a check register that looks an awful lot like Quicken. Right. In fact, it's really keying right off of that. And you see here what I did is I've got a beginning balance and I've got some fertilizer expense that I've got in here. It's the chart of accounts. If I go to this transactional thing and I pull down my chart of accounts, all right, I've got essentially my Schedule F uh, codes so that I can categorize stuff, to go along with my Schedule F, or there's machinery sales and those codes for capital assets. All right, and getting those separated out is, I think, a real critical part of that. All right, but I can't emphasize enough. All right, QuickBooks, folks, you really need to have a little bit of an accounting background before you take this thing on, because otherwise this is one I've seen way too many people that they said, "Oh, I heard I got to buy QuickBooks," and I got into QuickBooks, and without any training, and all of a sudden this thing turns into a three-headed monster, and then they get to the end of the year and they don't have anything done because they were frustrated to that point. You're much better off to start with something simple, get proficient with that, and if you want to graduate to this in a few years, that's fine. But there's a lot more moving parts to QuickBooks than what you're going to see with Quicken. And I'm going back to what I said in the slide a little over an hour ago. I don't steer people towards QuickBooks unless, if you've got a situation where you need to invoice people, you got to bill people, this is probably what you need. Or if you've got a situation where you need to track accounts receivable and accounts payable. All right. this will do it. All right. That, but otherwise, it might be, a little bit hairy on that side. All right, Harley, I'm going to switch back. I saw a question coming through.
Um, would most CPAs be able to work with PC Mars?
Yes, yes. In fact, they would, yeah, they would actually be pretty. Yeah, they'd be very happy with it. I mean, we've got CPAs all over Minnesota that that utilize that. So absolutely.
And the only other thing was somebody agreed with you on QuickBooks being kind of a bear.
Oh, yes, absolutely, absolutely, it is. Well, it just without that accounting background. Now I will say some accountants want you to use QuickBooks because they know how to use QuickBooks. And if they are willing to sit down and train you how to use it, and they give you the training of, all right, here's what I want you to do, and they adequately train you. If you got somebody looking over your shoulder, I wouldn't be scared of that at all. But to just do that without any kind of help, no, I wouldn't recommend that. Wouldn't recommend that at all. Uh, Other questions?
I'm allowing everybody to speak, so if anybody wants to verbally say their question, just raise your hand first. You got a thank you and a thank you for the great class.
Well, folks, thank you for joining. Here again is my contact information.
You got a
And
hand-raised, Mr. Dewey.
pardon me.
You have a question. Dewey wanted to ask a question.
Okay.
Okay, so I just want to confirm between the Schedule F and the Schedule C. So we predominantly do vegetables. Some of the leftover vegetables then we turn into canned good items. If I understood you right, those canned good items should be a Schedule C and not a Schedule F that we sell, correct?
Correct, because you're processing it.
Okay.
The
Yeah,
the
my
only the
accountant's
only
not following the Schedule C, they're only doing the Schedule F for me, so I just need to talk to them, I guess.
well, but the rule is that it's getting processed. Now, now, Dewey, here's a practical matter on this thing. If that's a de minimis, really tiny portion of it, it probably isn't going to hurt anything. But where you got to be careful of is if it starts to become a predominant part of it.
No, I understand. I also think that so we're going into our fourth year. I use QuickBooks, and I don't delineate. I do say what the item is in QuickBooks as a canned item, but I don't actually have a, specific what's that called? A specific class that breaks it out. I leave it alone. So if they're not digging into it, which I would hope they would, they may not be catching it.
Well, that's true. That's true. And a lot of times folks just use the code and they don't mess with the class. And I again, I would keep it simple, and that's what you're doing.
Right. Yeah, I have my classes are at the enterprise level, so
Hmm.
I'm always questioning though in QuickBooks whether I am for my charts of account whether I'm using the correct ones as I go on. More of it though at this point is me adjusting them so I can figure out where money's going and I can understand where it is while keeping it in Schedule F terms for the CPA at the end of the year.
No, I think you're on the right track, because you under the best part about this thing is that it sounds like you understand it.
Not as much as I'd like to, and I've had to force myself to learn it.
Well, but you're on the deal today, and that's a positive.
Side note, do you happen to, so the one thing I don't have an enterprise budget for is the market garden. You don't happen to know someone that has enterprise budget spreadsheet that I could steal and try to, manipulate to figure out an enterprise budget for that, do you?
Shoot me an email. I do have a teammate on our ag business management team. His name is Ryan Pesh. He does farmers markets and does those individual enterprises. My guess is he's probably got something, but I can get you in contact with him. But shoot me an email and I'll forward it on to Ryan.
Thank you.
Oh, you're welcome.
We have a question that says, what schedule would honey fall under?
Schedule F. And here's the other thing worth noting. Honey is the only thing that's specifically called out in the IRS code where you can process that, meaning you can bottle it and it's still considered farm sales. I mean, that's but there's a specific exception for honey. So you can you can bottle the honey and sell it, and that is considered Schedule F, start to finish.
Another question is, how can I learn more about loss carryovers?
Ooh, well, we teach that in our taxes for accountants. The problem is that we do those in October, so we've got a ways out there. Um, Shoot me an email now. I'm going to tell you up front. Shoot me an email. I can probably pull some stuff together, maybe from IRS or some, send you a couple articles on that, how that gets handled. But it may be next week before I have a chance to do it. Any others? Are you scanning them, Harley?
What code do I use on the Schedule F for apiary?
Remind me what that is for.
Bees.
Oh, that's going to be it's going to be line. That'll be line. It'll be the raised product line. I think that's line one, two. I think it's line 4. You'll have for honey. You'll any of the programs. I mean, if the I know PC Mars has a code that you can click for honey. You might have to set up a honey code in the for Quicken or QuickBooks.
Just to be clear, processed boilers are not reported on the Schedule F.
Now, the sale of the broilers is reported on Schedule F, and the purchase of the broilers is reported as an expense on Schedule F.
Not making any profit as a new farmer and rancher, should we file a Form 5213 to extend our years?
The presumption of profit is based on that you ought to make money 3 out of 5 years. Now, if you're brand new, I think what you need to look at is you need to look at how much money you're losing and also how many years you've been into this. I mean, nobody really expects a brand new operation to make money hand over fist right off the bat. So if you're year 3 and you've had big losses for 3 years, you might want to file that to extend that determination time, especially if you think you're going to be showing a profit, maybe by year 5 or 6. But that's probably something you want to sit down with your accountant and talk about. I mean, in fact we taught that this I think it was 2 years ago that we had that in our ag book that we discussed kind of the options for that, for especially for young producers.
Well, if there's any other last minute questions, please feel free to ask them or put them in the chat. I just wanted to reiterate, thank you so much, not only to Rob for a wonderful presentation, but to each and every one of you who made this presentation, well, my camera will turn on, sorry, so engaging. The questions have been really wonderful. I think that we were able to learn more about each and every one of your operations, and feel free to write down Rob's email here. You will be receiving an email from me. It'll probably be tomorrow because I'm here in Oklahoma and we're having extremely high winds, so my internet is not great as far as download and upload speeds for me to get the recording posted onto our YouTube channel, but I will make sure to have that email sent out to you guys by tomorrow. It'll include a copy of this presentation. It'll include the recording, and it'll include information up on our next upcoming webinar. And I just again want to thank you guys so much. We have gotten so many compliments. I would say, Rob, just so you know, somebody just put in the chat, thanks. This has been the best class so far.
Okay. Well, thank
This
you.
is the first time I've actually understood some of this stuff. So thank you. Thanks for making this available. I've learned a lot and really enjoyed your seminar. So it was really received. And Rob, seriously, thank you so much for seeing this need and wanting to do this special edition webinar. I truly appreciate that. And I want you guys to know that you guys can share this information out to any of your friends, family members, neighbors. Feel free to share this recording so that everyone has the ability to get in touch with this information, and it's all for free. So again, thank you guys so much. I am sorry that we did go over 11 minutes past our 2-hour time slot, but at this
No
point, Rob, do
worries.
you have any last words that you would like to say?
I'll just share with everybody. I'm just happy. I didn't tell everybody this earlier, but I had a meeting. I live in Southwest Minnesota, and I had meetings on campus in the Twin Cities, which is the other side of the state, yesterday, and ended up getting stranded in the Twin Cities last night. And I literally pulled into the office here about an hour before the call came. I was white knuckling it in the blizzard coming home today, and I thought I was going to have to do this at a county office, but I actually did make it back home. But I was just happy we were able to get the thing pulled together, and I thank everybody for joining us today.
Yes, thank you so much. I am putting in the chat one last time, Miss Mariel's contact information. If you are a veteran and would like to hopefully connect with the Farmer Veteran Coalition, I just put her email back in the chat. So feel free to connect with her that way. And have a wonderful day.
Thank you, everybody.